Hello, everybody. Good afternoon. Welcome to the First Time Homebuyer Seminar. I'm Julie Vella, and I'm a mortgage consultant with Family First. And we have Ron Kraft right here, and he's also a mortgage consultant with Family First. We both have over 25 years of experience in mortgage, so we'd like to share that information with you today and help you on your journey to first-time homebuyer ownership. And we'd like to give you some more information about Family First. In case you haven't heard of us or you haven't done any business with us, we'd like to tell you all about Family First and how we started. Okay, Ron is going to talk about our history of Family First.
So just a brief history, the credit union started in 1969. We basically began as a single branch that was adopted to serve the needs of the Penfield School District. And we have expanded from there. We now have over 5 branches, and our total member count is actually exceeding 15,000. And we provide secure and innovative financial services to all our members.
Why would we choose Family First Credit Union? We are a nonprofit organization. We're focused on our members' needs. We are also people helping people reach their financial goals. That's what we do here every day is I'm just trying to help people get to their goals, where they need to be. We do have fast turnaround times, so it is nice being small and local. It enables us to have faster turnaround times on our loans and so forth. And then there's that local. Everybody wants to work with someone who's local. They can see their face, they can call them on the phone, and we're right here. Lower PMI rates than retail banks. So that's just something to remember that when we talk about PMI, that's private mortgage insurance, and that goes on our mortgages. And we just have lower rates than retail banks. So that always makes our payment lower by having that lower PMI.
So basic requirements for getting a mortgage, typically minimum credit score is 620. There are some exceptions, but that's the general rule. To get the best possible terms, meaning the best rate with the least points, 740 is the top tier. Like when you go buy a car, they're always talking about top tier. 740 is the magic number with us. That gets you the best rate and terms. Typically on a credit report, we're looking for 3 trade lines. If you don't have 3 trade lines, we do what's called alternate credit. We'll ask if you have subscription services, Spotify, do you have a Verizon or a cell phone bill, do you pay your auto insurance? We're just trying to build repayment history. Typically, we look back 36 months when looking at a credit report and a credit history.
Now, this is talking about down payment, what you're going to need for a down payment and the types of loans and what they require. So we start with conventional mortgages, and on our standard conventional mortgage, it's 3 to 5% down. For our first-time home buyers, we do allow the 3% down on conventional, and we also have Home Ready, which is for first-time home buyers, and that one also it does allow for 3% down, but also it does have a maximum income limit on that one. And we are required in order to avoid PMI, you have to put 20% down. FHA, however, is 3% down, 3.5% down, and PMI is mandatory in FHA, and PMI is on the life of the loan for FHA. VA is for our veterans, and that is 0% down, no monthly PMI. USDA is for our rural areas or specific areas that USDA can do the financing there. And Sunny Mae stands for State of New York Mortgage Association, and that one is 3% for the minimum down payment.
So on a typical conventional mortgage, 5% is normally what we're looking for. But again, we do have the low down payment programs where you can get to 3%. And again, the USDA loan is actually 0. If you're trying to budget for closing costs, it really depends on what county you're in. The typical norm is 2.5% to 4.5% of your loan amount. And again, that can vary. And it's the same thing with the taxes, 2.5% to 4.5% of the purchase price. What we like to do is get on the Monroe County or whatever county website you're buying in and look up specific taxes so we can see what they are. With homeowners insurance, you're going to need homeowners. Typically, the cost on your estimate that we'll give you will be 1 year. Property inspection is optional. The way the market's been lately, I know a lot of offers have been going in without an inspection. If you do elect an inspection, that's something that you have to pay for. It's not provided by the bank. And then you also will have an attorney fee. We are in a state where New York State does require that you have an attorney. Some other states are title states like Florida where a title company closes. But in here, in New York, we do need a attorney to represent you and close.
The mortgage process. So this is how we start is by issuing you a pre-approval. So that means you'd have to contact Ron or myself, and we take some information from you. We collect your income information. We do run a credit report, and then we use that information to determine how much you're pre-qualified for. And then you take that pre-approval and you give it to your realtor. So once you found a home with your realtor and you want to put an offer on, your realtor is going to write a purchase offer for you. So we do have Shawna Gersh from Hanna here, who's going to speak later about how to write the offer and so forth. And inspection, like Ron was mentioning earlier, it is optional. This is not a popular time really for the inspections. However, if you elect one, it would be on your purchase contract. Application. So after you have an accepted offer, that's when you're going to formally apply with Ron or myself, and we take your application and we lock your interest rate and we give you all the terms of your mortgage.
The appraisal. We're basically in charge of the appraisal. We have appraisers that we have relationships with, and we will send them a request for an appraisal to be completed. The appraiser will contact the realtor to set up an inspection and determine the current market value of the property, and then it's returned to us. We review it, and then we will share it with you. The commitment, after it's reviewed by the underwriter, we do issue a written commitment, which will be sent to all parties. Very important on the very last page to read conditions. Very few times do we just issue a commitment and there's nothing that you need to give us as far as additional documentation. So typically, one of us would go over the conditions with you. Once all the conditions have been met, the credit union will clear your file for closing. Then it's basically up to you and your attorney to schedule your closing. And after that, you get the keys and get to move in.
This is talking about what to do. So basically, when you're working with your mortgage consultant, you're going to need to provide any documentation that's requested of you. And it is kind of important to give that information as soon as possible because we are working on certain deadlines that are in your purchase contract, such as the commitment date and the closing date. So in order to keep everything in a timely fashion, we do request that you give us all the documentation required to help us move along with your purchase. If you're purchasing a home and where you're using one of the first-time homebuyer grants, such as the Homebuyer Dream Grant, which we're going to talk about later, it is imperative that we process the file as soon as possible because not only do we have to get underwriting approval here at Family First, we also have to go through any of the grant folks and get your grant approved. And that's another whole process that may require different information from you.
Some things not to do when you're applying for a mortgage. Don't go out and try and open any new credit cards or buy a car or anything like that. What'll happen is the institution you're working with will pull your credit and that will potentially lower your credit score. So we encourage everybody not to do anything. And again, don't delay in submitting your loan application. Especially in this market, the timelines have been compressed. It's not like it used to be. So we're under the gun to deliver a commitment by a certain date. So we need to jump on it and get it moving. Also, don't try and use your charge cards. Like if you had low balances, don't go out and buy your washer and dryer and your furniture. Don't do that until after you close. And also don't make large deposits that we can't verify. If you get a bonus and it's direct deposit, that's fine. But if you lent Uncle Ben $10,000 and he gave it back to you, don't put it in the bank because we have to paper trail everything. And that's just it's gonna make it a challenge. Also, try not to change jobs during the process. That again is going to add additional time because we're going to have to re-verify And if you do change jobs and you're not in the same field, that could create a whole new issue. So try and stick it out where you're at. If you do get a pay increase or a decrease, let us know. Send us in a note with a pay stub. Let us know what's going on. And we do ask for a lot of documentation. That's just the nature of the beast. That's just how it is. Don't think we're picking on you. It's not a bad thing. We're trying to get your loan approved. So just please help us out. Don't make it confrontational. If we ask for something, we typically tell you why we're asking for it. We just don't ask for it to ask for it. There's rules and regulations that we have to follow. And if you have questions, ask. We're more than happy to answer them.
So our team here at Family First, here's myself and Ron.
Bill Holofield's our underwriter and Lisa Willie is our processor. They're all involved in the process.
We have Alice, who is in servicing. So she handles everything after so it's post-closing. She handles all those questions. And then we have Colline Perry-Curso, and she is the mortgage manager.
Now we're going to talk about some of the first-time homebuyer grants and assistance that are currently available.
So a popular grant that we have right now, it's actually coming out on March 27th, is the Homebuyer Dream Grant. And this is facilitated by the Federal Home Loan Bank of New York. And that grant is for $10,000 and it can go towards your down payment, your closing costs and taxes. However, there is a $500 defrayment cost that goes to the nonprofit agency where you take your first-time homebuyer counseling. So that first-time homebuyer counseling is an online course, and Ron or I will send you the link to take the course. There's a small cost to it. And we have Andrea Colline here from CCCS of Rochester. She's going to talk about that course, how to get on the site and so forth. We also have to verify your income. So most all grants and anything for the first-time home buyers, as far as assistance, we have to verify your income because there is income maximums on these grants. So we verify your income from the beginning to tell you whether or not you're possibly eligible for these grants. Applicants must provide the last 30 days of pay stubs for these grants before the submission. And in order to get the Homebuyer Dream Grant, you need to be in a purchase contract. So you need to have an accepted offer. We take the accepted offer, your pay stubs, and the certificate from your first-time homebuyer scores. And that is what we use to submit for the grant for you.
Sonny Mae offers different mortgage programs. Their best program is called Achieving the Dream. They also have what's called a low interest rate program. The Achieving the Dream actually has the lowest interest rate, so it's kind of a misnomer. But the difference is, number one, interest rate, and number two, income qualifying limits. The Achieving the Dream has a lower limit than the low interest rate program. They're typically 30-year fixed rate mortgages. Down payment requirement is 3%. You can lock up to 120 days. There is actually a 240-day rate lock available if you're building, which is kind of nice because typically there's an expense to that, but they do not charge you for that as long as it's new construction. Your contribution, minimum of 1% of the purchase price. And what's great is you can combine Sonny Mae loans with a ton of different grants. They let you stack them up. You could get two different grants, a homebuyer grant and a DPAL grant from Sonny Mae. Works out well.
One thing I was just going to add quickly about the 1% of the purchase price is required of our cash contribution. So that's 1% of the purchase price. So just for even numbers, $100,000 purchase price, you have to have that $1,000, the 1% in your bank account before you apply for this program. So it is important to have the money already in your account, and it can't be put in there later. Pathstone grants. So we work with Pathstone as well, and they have a down payment assistance loan, and that one goes up to $5,000. There is no minimum credit score, which is nice, but you do have to have 3 trade lines, and by trade lines we mean you have to have 3 creditors on your credit report. That's just one of the requirements, and they do allow up to 100% of the median income of the county that you're in. So they allow a little bit higher of an income on this one. The interest rate is the same as the mortgage rate. So for example, if you're getting a rate of 6.5 on your mortgage, this particular loan is at 6.5% as well. It has a payback on it, and it's can be paid back anywhere from 1 to 5 years. It is amortized. You can pay it off early. There's no prepayment penalty on that. And our maximum debt to income ratio on this particular type of payback loan from Pass Down is 45%.
Pathstone also has a closing cost loan, can be used for down payment, closing costs, and your taxes. They do secure the property, and you also do have to do a home buyer education course. And the loan can be, again, combined with other grants and down payment assistance loans and grants.
Sheen Housing, so we also work with Sheen Housing, and they have another grant. This one is up to 3,000. It assists with closing costs, et cetera. And this one is at a 0%. So it's no interest to be repaid on this one. It is $50 a month for 5 years. There's no prepayment penalty. It is a lien on the property. This is for first-time home buyers. And we consider those first-time home buyers to be, you haven't owned a home in the last 3 years. It must be a single-family home. You cannot have a multifamily in this particular grant, and you must complete the homebuyer education course. So you can see this homebuyer education course goes through most of all these grants. You're pretty much going to have to take a course if you're a first-time homebuyer. So what we'd like to do as far as questions is there is a chat box. You can put your question in there, and what we're going to do is go through the speakers. So put your questions in there, or we can save them right till the end. And any one of the speakers whose questions directed towards, then we could have anybody answer those questions at the end. So we're going to turn it over to, just get back where we belong here. Back.
Yes.
So we're going to turn this over to Shawn. Shawn is with Tompkins Insurance. He's an insurance professional. He is replacing, we did have Carmen Cavatasi. He got caught up at a meeting, so we have Shawn, who has been more than willing and happy to do some presenting. So Shawn, you can take it away.
Sorry, can you guys hear me?
Shawn, we can hear you.
Oh, so thank you for the introduction, Julie and Ron. As mentioned, I'm just here to replace Carmen. But I am an insurance broker for Tompkins Insurance. And I've been doing this for about 10 years. What I can tell you, insurance is not fun, but I can make it simple. And there's just like a few things I wanted to leave you with. So I'm going to be sharing this PDF form, which actually kind of covers the overlay of securing homeowners insurance for your new dream home. Congratulations. Just give me 1 second here. So this is basically just homeowners insurance 101. And the component of homeowners insurance and why it's so important for you. It's like once you secure the home and you get into the home, you know, it's probably going to be your largest prized asset. And what you want to make sure you can secure is that in the event there's a fire or you take any type of loss, you have a claim, that you can get your money back. And that's what homeowners insurance is, the concept of indemnity. You drive home one day, your home's in a fire, and you lose it, you know, your insurance company is going to step up and pay you what it takes to rebuild the home. So it's very important that you pick that like right up front. But I'm just going to go through these series of slides with you to just kind of show you exactly what are the most important components of your homeowner's insurance. So on this first page, we understand that homeowners insurance was originated in 1958. The most important thing, you know, for homeowners insurance is to ensure, as I mentioned, in the event that you take a loss or you just have a claim, that you can get your money back. And it's very important to the mortgage companies as well, which Family First, I'm sure, will tell you. Now, what we're looking at here is the replacement cost versus actual cash value. You don't necessarily want to get too tied up in that comparison, because if you secure a mortgage, most, if not all, mortgage companies want you to secure replacement cost value. And what that means is that these guys can guarantee that whatever, as I said, whatever it costs to build a home, they actually can issue a payment for you to replace that amount in the event that you take a total or partial loss. Now, some of the factors that actually go into like what the rate will look like on your homeowner's insurance policy will be based on zip code, like the location of your home, how recent updates were made. If you have a trampoline in the backyard, which I know some of us has kids, but a trampoline is dangerous. It's a hazard, dangerous to your kids, but even more dangerous to your next door neighbor's kids, because they're likely to sue you if Johnny jumps on your trampoline and breaks his arm or his leg. On top of that, having a pool or having certain types of animals in the home will be a factor in them either determining the rate, and in some cases, even in accepting you as a client. So if we're looking at the right side for the homeowner's insurance policy, this speaks just exactly to how a homeowner's insurance policy is structured. If you're looking at coverage A, this is the dwelling, and this is the most important part of the policy. And dwelling just means house, okay? So, you know, the living room, kitchen, bathroom, all the rooms, the basement, that would be considered the dwelling. And you'll actually see that listed all on your declarations page when you get the policy. And it's going to show you like how much your house is insured for. And then like, you know, like what the actual coverage is. Now, coverage B, other structures, just talks about things like garages, or if you're a swimming pool, or if you choose to build a shed on your property. And having a claim on a shed does not affect the claim on your house. Separately, the personal property for coverage C, that just covers everything that you move into the house that was not built with the home. The most typical things are going to be TV, bedroom, bed sets, clothing, and all of that. And then lastly, something that people always skirt over is coverage D, which is loss of use. Like sometimes you want to skim past it, but you don't want to do that. And coverage D is what takes care of you having somewhere to live in the event that you file a claim. So I'm sure you want to get the $400,000 check back to rebuild your home in the event you take the loss. But until the home is rebuilt, you need somewhere to live, right? So loss of use is actually going to pay for you to have somewhere to live until your home is rebuilt. Or if you've just chosen to move somewhere else, coverage D is going to take care of that. Lastly, coverage E, personal liability. Again, it doesn't sound like a big coverage change or challenge, but what that is if anyone wanted to sue you in any situation where you were liable for any type of harm that was caused to that person, your personal liability actually stands in place for that. So if somebody wants to sue you for $500,000, sorry about that, as long as your homeowner's insurance policy covers it, they would actually take care of it. Your homeowner's insurance policy would take care of it, you know, as long as it's a covered loss. Now, you can't get a insurance policy for like punching somebody in the face because it was criminal and it caused harm, it was deliberate. But in the event, like we were talking about with your kids, virtual kids, jumping on a trampoline with the next door neighbor's kids, if that kid, the next door neighbor's kids, is jumping up in on the trampoline, he breaks his arm, and now he needs, his parents want to sue you for all the 5 surgeries he needs to take, it's going to come out of personal liability. Like if they chose to sue you for his $200,000 worth of injuries. One second. So that's really the extent of the first page. Let me see. And I apologize for kind of going over it so much, because if we get to page 2, we can see medical payments coverage actually explains what I kind of just like skirted over a little bit just now. Now, you guys are looking on page 2 at these coverage forms on the right side. And what you're looking at, unfortunately, are not policies you can take advantage of for a good reason. only because when you get all homeowners insurance, most mortgage companies, just in terms of making sure you have the best coverage, they don't want an HO1 basic form and they don't want an HO2 broad form. What these guys are going to be looking for is on page 3, if you can switch with me, it's the HO3 special form. So that is the most expensive, extensive, all-encompassing coverage or policy that you can take advantage of, in which you could have virtually almost anything paid that's covered that an insurance company would pay for. So be careful when you're speaking with agents and they're issuing quotes to you. You know, you want to ask the agent if it's an HO5 policy or if it's an HO3. Or let's just stay focused in this case, I'm sorry, for HO3. And the HO3 is going to cover the things most likely. I'm looking at this funny list right here of certain things, you know, that it doesn't take care of. A lot of people don't know that a home policy does not take care of any type of act of war. They're always shocked by that. For something like number 6 and number 7, earthquake or flood, that coverage is actually usually separate. Every once in a while, you can have a little bit of earthquake coverage like added to your home policy, but those are usually policies people buy separately. Now, if you're looking at this page on part 3, where we are, please take special consideration and focus on water backup and sump pump discharge. Again, it's another one of those coverages that don't look very important, but what it really is, it's for people who have basements in their home, and in the basement they have a sump pump. So if you find yourself in a situation where you put you know, some of your prized stuff like in a basement, it's usually like a washer and a dryer down there. You know, people store a lot of their personal items down there. In the event that your sump pump failed and the water begins to back up into the home, and it actually causes damage or destroys what's in the basement, on a standard homeowner's insurance policy, that claim will not be paid. I repeat, it will not be paid if you do not have water backup coverage or sump pump discharge or overflow. Again, it sounds extraneous, but if your home comes equipped with a basement and you plan on storing something down there, you should get it. And honestly, guys, you should get it no matter what, because if your sump pump fails, even if you have nothing down there, you will see an accumulation of mold. And in order to remediate and remove the mold, your homeowner's insurance will actually pay for that as long as you have the coverage. So the sump pump discharge overflow charge coverage. I'm sorry, it's like an echo on my line. Sorry about that. But that will actually take care of very well anything related to the basement for the home. We are going to go to page 4. I'm sorry, I left off, I'm sorry, skirted past identity theft. It's just like a nice little endorsement to have on your policy in the event that somebody steals your identity. Now, they don't pay you coverage, or they don't give you coverage for your identity being stolen and giving you money, but it is costly to hire attorneys and deal with banks and anything else wherever your identity was stolen. There is coverage where they will pay you for what you had to pay in terms of getting an attorney to get yourself back to where you were. So if you're like in a highly volatile area where like a lot of your information is being exchanged and you want that protection, identity theft protection on virtually any home policy is fairly cheap. So respectfully, I would tell you to get it. Now, the one thing I did want to include, I wanted to mention right at first, was just that when you are getting a mortgage, most mortgage loan officers, if not all, you are going to be required to pay the first year's insurance premium in full prior to owning your home. So you do want to prepare yourself for that. What you look at, I'd say between Genesee and Monroe County, you know, in terms of insuring yourself, is going to be roughly about, you take the square footage of your home and it's at about $165 per square foot. And I'll let you know exactly like how much you actually need to insure the home for. Just like when it comes down to things like claims, I don't want to stay on this too much because this is a little bit more like Tompkins focus. But it really never changes. Should you ever find yourself in the event that you need to file a claim, insurance companies are actually very transparent and very helpful with making sure that there is an available phone number that you can call and let the insurance company know what happened, so they can take the appropriate steps to get you in a claim. And they're going to move really fast to make sure that, you know, you're not sleeping in the street, that you have clothes and food, you know, until you can actually get your home back. You know, when people have a fire, they really don't know what to do. It doesn't happen often. But if we go to the bottom of the screen, as I was mentioning with the flood coverage, it's a separate coverage. Please don't ever let an agent make you think that you have flood coverage because he told you have the best homeowners insurance policy in the world. In some particular cases, flood insurance is actually mandated and required separate of the homeowners insurance policy based on your flood mapping and the flood zone. So what you want to do is just make sure that, you know, when the agent is telling you what you have, he's specifically mentioning that you have a homeowner's insurance policy, HO3, and just the same that you have a flood policy that in most cases is generated right from the United States federal government. Now, this is actually a little bit of what I touched on with the flood coverage on the previous page. But right here on the top of this page, it's just going through specifically what flood zone you're in and how that could actually affect what your rate's going to be. You know, I hate to lie to you guys, but you know, flood insurance rates aren't necessarily the lowest. So what you want to look at is finding out if you can find somebody who can competitively shop you somewhere outside of the flood market. It's known as like excess lines coverage. And in some cases, you can take advantage of it based on what kind of mortgage that you're securing. You can't really do excess lines flood coverage if you're taking advantage of a government loan. They require that you take advantage or you utilize the government issued flood coverage. But if it is on something like a private loan through a bank or a Fannie Mae or Freddie Mac loan, that is an option that is available, and it's much lower. It's much lower. Now, the only thing that remains, is the liability coverage or this personal umbrella policy. And what an umbrella is an additional extension of the liability authority granted to you on your home and your auto policy. So it's kind of like an overarching additional liability policy, and it doesn't seem like much. But what the real big benefit is when somebody sues you, what most people don't ever consider is you really don't know what they're suing you for. And, you know, if it's an amount where you're sued for, let's just say $10,000, that's something that your insurance company can settle with no problem, right? You have at least $300,000 to $500,000 of coverage. But what if you cause injury to an attorney or a CEO who was at your home, and now this guy can't work for the next 3 to 6 months, and as a result, he's going to lose, you know, $2 million. So because he has a loss of income, you cause harm to him. Let's say playing a neighborhood, you know, football game with all the neighbors, you throw a football, it hits him in the eye, and now he can't work for the next 6 months. That responsibility, that liability is borne upon you. Now, if it's just your standard home policy, let's say with $500,000 of coverage, the homeowner's insurance company is going to pay the $500,000, and then the rest of the debt gets transferred to you. But with an umbrella, they will give you anywhere between $1 million to $5 million to $10 million of additional liability coverage, and it's actually very, very affordable. What you usually see on umbrellas, if it's you, let's say your partner, if you're purchasing a home, as well as a car, maybe you see an extra $200 a year. So you're going to see maybe an extra $15 to $20 a month to protect yourself for an extra $1 million to $5 million a year. So it's definitely worth it and worth considering. So I do apologize if this has been a little bit jumbled. You know, I'm just kind of trying to fit in for Carmen. But I did want to make sure you guys had a fervent understanding of what homeowners insurance is, even if I kind of steamed through it. Does anyone have any questions?
Thank you, Shawn.
No
You provide-
problem.
You provide a
Thank
lot
you,
of
guys.
great information. You're welcome.
No problem. Take care, guys.
Thank you. So next I'd like to introduce Andrea Colline. She's an outreach coordinator with CCCS of Rochester. And she has a lot of good information. She's going to tell you what CCCS can offer to first-time home buyers, but also to anyone in general who may need some help. So Andrea, take it away.
All right. I just need to share my screen. So I don't know if they're still
So
sharing.
okay, yeah. Let me see. Shawn, are you still on?
Let's see here.
Can you hit share and go? I don't know if you can share right over that.
It might let me. I think something's happening.
Yeah. Perfect.
Can you see that?
Yes, we can.
Wonderful. So I feel a little casual today. Sorry about that, everyone. So hi. Thanks for having us today. And welcome everyone. My name is Andrea Colline and I work here at Consumer Credit Counseling of Rochester, and that's also known as TCCS of Rochester. And I thought maybe I would just talk a little bit about like who we are and what we do and the role that we play for first-time home buyers in our community. So just a little bit about us is that we are a nonprofit organization, and we're located right here in Rochester at 1050 University Avenue. And our mission and affiliation is to focus on individuals to help them reach their, and I'm sorry, individuals and families, helping the individuals that we're serving to reach financial goals, have a good level of financial wellness. So at our organization, like I said, we've been around for over 50 years and we do a lot of different services to help people to reach that. The big component behind all of it truly is education, but we'll have education about obviously for home buyers, for first-time home buyers, for current home buyers. We help people with just getting a better understanding about budgeting, credit, protecting identity, all of that good stuff. And it could be done in a workshop setting or in a one-on-one financial counseling session. So our focus today, of course, is homeownership, but I'll still just talk a little bit about all the different programs and services that we offer. So we're genuinely committed to providing guidance to help people achieve their financial peace of mind. And the financial counseling services that we offer, we do one-on-one budget and credit counseling. So when it comes to homeownership, with many of the programs, they do require some kind of a HUD certified education or counseling, and that is done mostly online. It doesn't necessarily require a one-on-one session, but you can certainly do one. I think it's a good idea, really, to kind of look at where we stand with our income, our expenses, our debts, and things of that nature. So we offer budget and credit counseling. We also offer programs to help people if they need some support in repaying their credit or debt, or just a better understanding of where they stand, like what can they do to up that credit. I know that, there's all kinds of situations that people are looking, to purchase a home, and someone could have like a great income, but they might be held back because they have some older issues upon their credit report, or not even, not bad credit, but you're like, I want to pay off some debt before I start entering myself into like mortgage payments and things like that. And I think that's smart. And, we really want to make sure we highlight that. Of course, the education is a big deal and definitely helpful, but things like that too, making sure that we're on track with our other goals, before sustaining that is definitely a very, key component. So we help with that. And let me get to my next slide. There's also another service. I just want to talk about this a little bit because this is kind of newer. This is financial empowerment counseling. And when it comes to financial empowerment counseling, this program has been around since 2020. And what we offer at Consumer Credit, we do budget and credit counseling. And of course the educational sessions, but the budget and credit counseling sessions sometimes could be a little bit more tailored if someone's really looking to try to pay off credit or debt, where financial empowerment is where someone would meet with someone like one-on-one to help them as many times as needed to really get them to where they want to be. So one of the things that we're seeing is that they're counseling a lot of people who are looking to purchase a home. I know there's a lot of friends even right now who want to purchase a home as well, but they're just taking their time to understand what's going to happen with the market, take that time to really educate yourself and see what's going on out there. And a lot of people are taking advantage of these free services to help them with just a good system for managing their money, understanding their behavior, because it can go deep. I mean, we're not going to talk all about that today, but when it comes to spending and using credit, it's efficient, but people can get over their head really quick. So again, our focus today is home ownership, and I promise we'll get there. But I did want to talk a little bit about some of those programs and some of those services as well, because they can complement looking to purchase a home and staying on track with everything else. So the focuses of the financial empowerment counseling are savings, banking, debt, credit, all that good stuff, and they can all be accessed here. And we can provide a copy of those slides as well. Sorry, I'm a little crazy over here. Makes it more fun, right? So home buyer workshop. So I thought I saw something in the chat. I don't know if it was to everyone or just to me, but I'll talk a little bit about this. So when you're looking to obtain a grant as a first-time home buyer, there are programs out there, but the one common denominator, which I think is really good, is that they want you to complete a formalized housing counseling, or not housing counseling, but first-time home buyer educational program, right? So the key components, just want to put it out there because sometimes it can get a little confusing, is it must be HUD approved. So if you're looking to take a course, HUD approval is number one. There's a few agencies around here that do it, but we definitely do as well. Like I said, it's required for most grant programs. The way that we're doing it is it's completed online through our eHome America, which is a really nice course. The fee is $40 to complete that course, and it takes you through like a series of different topics. The average time frame it takes to complete is about 3 to 4 hours. So it's not just I'm going to answer yes and get through it. Like, some parts you can't move on until, you've answered a few questions after each section, and you can go in and out as you please. So it'll save your information. So if I want to do, 30 minutes today, half an hour tomorrow, an hour the next day, you can do it as often as you need. And then if people need, like, they still want to talk to one-on-one with someone, they can do that as well. So that's the course. At the end of the course, the nice thing is that you do need to provide some sort of certificate to your lender to let them know that that course was completed, and you can obtain it and print it right here, right through that site. You'll have access to it. You can shoot it over in an email. So we don't withhold anything or anything like that. Like, once you do the work and you complete that course, that's it. We host it, and we're here to, offer that support. It's typically good for 12 to 18 months. What I mean good is that if someone took the course back in, 2020 or 2021, it expires because things change. The course changes, the market changes, and it happens sometimes. So if someone's taken the course before and it's been more than a year, I say a year to 18 months because it really just depends on what program you're doing. Some might, let it take a little bit longer. It really just depends. But I think about a year. I think that the home buyer dream is 18 months, if I'm not mistaken, but the other programs might want it within a year. So it's good to time it. I mean, the worst case scenario, you take the course expires, you take it again. I mean, not that you want to have to do that, but that's like the worst case scenario. So that's some of the tips about the course. If you're curious, I threw in a QR code. It's one of those free ones, so it's not real pretty, but it does get you to the screen. Feel free to take a photo shot of that, and it will bring you right to our website, and it will give you instructions on how to complete the eHome course. Again, the first thing I think we have to do is just fill out like an application, and then there's a fee that you pay, $40, and then you'll have access to it, and it just kind of walks you through. There's videos, there's someone talking in the back. It's what I mean by that, it's interactive, right? And then sometimes, even though, we used to do this like once a month on a Saturday, we'd have like a room of like 30 people, but it's just, people just weren't comfortable with it. Maybe that will change, and I will definitely keep everyone posted as how things are changing. But for right now, we are offering it online. And if people still also want to connect with someone one-on-one to kind of look at their financial picture and kind of figure out like what their next step is and maybe what their credit looks like, or maybe develop a timeline. So maybe this is like your first stop and you're like, I want to develop a timeline. Maybe I need, a year and a half to save up money, because the more money you have, the life is just easier, right? But the more money we have to put down toward a house or a home, the less for financing, the more you can have, set aside for emergencies, the less debt you're carrying, especially credit card debt, the easier it's going to be to, that's kind of an open statement, but you're not going to have all those payments. Your credit will tick up a little bit. If there's older debt, collection items, or things like that, definitely want to clear those up. If that's the case, don't let that hold you back, but do reach out to us, because that's something that we can definitely, work on with people. A lot of times people can feel, overwhelmed and try to deal with it on their own if the debts are in collections. And sometimes it's not a huge amount of debt. It's just like old stuff. They're like, what do I do with this? That is absolutely an opportunity to reach out to us so we can walk someone through that and figure out how to prioritize repayment, what's going to help them, reach that credit score the quickest, in conjunction with a nice planned out spending plan, like a budget plan, so we can kind of see where we stand there. I hope that little code worked. If you want to try it out, feel free. Again, we'll get you these slides so you can use these. It's if someone does meet with us, there's not a fee for that. There is a fee for the course. But if someone does meet with us, it's individualized. Everything's confidential, comforting and motivating. We typically book an appointment for I was going to say 1 minute because I saw 60, but I promise it's like at least an hour. It could be done in person. It could be done on the phone. It could be done virtually, whatever you think is going to really help you, get to that place. If you want to do that, usually the big thing is the workshop. It just depends on where you are in the process. That is definitely required for most of these I think for all of these grant programs. And it's not an accident. It's great information. It can help you ask the questions you need to ask, things we might not have thought about. Some of it you might be like, okay, I know this is stuff I knew, but some of it might not be. And it may help you, like I said, think of something a little different that help you notice something a little bit different on like a statement or just a process. And it's just good to have that knowledge so that we're informed. And asking the appropriate questions, not only can it help you, have a better process, but it can help you reduce your stress. It can help you to stay on track. It can help you focus on, your ultimate goal. So definitely think that's a really helpful resource. Also, I should have added a few slides in about credit, but so I'm just going to talk about that real quick. I just want to be coherent of everyone's time frame. But with your credit report, that's like the biggest thing that we do and educate. You can always go to our website too, because we do a lot of like just community courses. We do a lot of little mini virtual type things. Money Week's coming up the week of April 17th. So there's every day, I think during that week, we're trying to do something for our community, or we're partnering with an organization. It's like a whole federal program. But regardless, if you don't know what your credit score is, and I feel like that's uncommon nowadays. I feel like most people have a good idea, especially people who are looking to purchase a home, about like what their credit scores are, because there's the financial technology tools like Credit Karma and things like that. But just a few little words, just so you know. Your best bet to really gauge your credit is to first pull a credit report, all 3 of them for free. You can go to annualcreditreport.com. And what I'll do is I'll add a slide in here so that when you get it, it'll kind of walk you through the process. You don't have to remember everything I'm saying. Take a look at what's out there, address any issues. If there's issues that you need support with, please call us and we can try to walk you through that. Get an idea of where your credit score stands. One thing to be aware of is if you are using the apps, a lot of times they use what's called a Vantage score. It's not your true FICO score. So many times when you're using the apps, I think they're helpful and they help teach us, but it's not the same score that your mortgage lender is looking at in most cases, not in all cases, but you can get a FICO score if I think it's like myfico.com, if you're really that curious to see where you stand. Your mortgage lender will probably tell you, just so that you can kind of get a view for that. But the best things we can do just to have good credit are pay everything on time. Always. That's the biggest thing. If you're delinquent, we want to figure out a way to get current. Again, opportunity, we can help with that. Honestly, can. And is to, just because someone has like a lot of debt doesn't necessarily mean that they have bad credit. Like if there's, a car loan or student loans, the main thing is that we're paying those on time. And then the other part of it also is like paying down creditor debts, like credit card debts, to less than 30% of their limit. You want to keep them open. You don't want to close them, because if you can keep them open, it will help you sustain that history. So those are the things I know that both Julie and Ron in the very beginning, which I love, they mentioned like, be careful, like don't apply for credit, especially during the mortgage process. That's because it can show up as an inquiry. If you pull your own credit report, it won't do anything. But if you apply for like, an exciting type of credit card for furniture or something like that, it can throw your whole picture off. So let's stay away from that unless you're specifically told to do that. So the biggest features I will tell you to have good credit is to be aware, start paying down any creditor debts, clear up any old stuff. If we need support, again, we can do that. And, just look at sustaining that. The higher the score, the more opportunity we have. But I mean, I love talking about credit scores because it's factual and it's fun and it's motivating, but I'm telling you, it's about balance. Like, I would rather have a score that's 30 points lower and have control over my income, know where my income stands, know where my monthly expenses stand, so that I could, build savings and just have that good, healthy relationship with money. And a lot of times we don't, because we are in a fast-paced world. You can have anything when you want it. You could buy anything anywhere nowadays. And not that it's a bad thing, but for people who are looking to purchase a home, a lot of times that's where the debt starts, is like after you purchase the home. So it's not just important to have that balance before, but to sustain it after. So we do have educational workshops, like I stated, counseling for people who recently purchased a home, just to help them sustain that and stay on track. So with that, I think I kind of talked a little too much, but we are here to support. We are partnered, with Family First, and just want to be able to support that. So feel free to reach out. Here is another code. It's so fancy. That one looks pretty though. Another code, you can feel free to scan it. But like I said, I'll get you the slides too. So if you want to utilize the links or whatnot to kind of investigate what we got going on, please feel free to do that. But with that, I will close the door. Are we taking questions now or at the end?
I prefer to take them at the end, just so we'll move forward and they'll catch everybody up at the end. Also, if there's any questions for you, Andrea, and maybe there's later on or something, I can always reach out to you and we can always get back to that particular person. So no problem at all. Thank you so much. You had a lot of helpful information.
Great, thank you. I'll still be here. I'm just going to close everything down.
Awesome. Okay, thanks so much. Okay, so next up we have Shawna Gersh, and Shawna is a real estate salesperson from Hanna, and Shawn is going to also have a lot of information about where the current market stands. And I know we're in a different type of market right now, so it is helpful to hear from the agents that are out there and working in this market to give us some idea of what's happening and what's available, what's not, and so forth. So Shauna, are you ready?
I am ready.
Awesome.
Hello, everybody. So my name is Shawna Gersh. I am with Hanna Real Estate Services. I am 3 years in real estate. Prior to that, I have 9 years of banking and lending experience, and 3 years in mortgage. So using all these services, and everybody is fantastic. I see a lot of overlapping. You'll see that a lot in purchasing your first home. What I like to do as a real estate agent is I will reiterate the process of purchasing your home and piggyback on what Julie and Ron are telling you and what your attorney is saying, and sort of breaking that down, recommending the first time home buyer programs, grants, and CCCS of Rochester and your insurance, and kind of tying it all together and helping you out through the process and answering questions and navigating you towards those people. But currently in our market, we are in what we call a seller's market. A seller's market is in benefit of the seller. We have a very low inventory right now of homes on the market, and we have a lot of buyers. So it's been very competitive. As of today, we have about 180 active listings. Only about 50 of those are outside of the city of Rochester. So that gives a very, if you're looking for a suburb or a rural housing, that's going to give you a very low amount of inventory to choose from. If you're within the city limits, you will see that a lot more of those houses will be on the market a little bit longer. And there will be many more choices. Right now, one of our most popular areas of purchasing is in Irondequoit in Greece. You will see homes that are going up on the market with delayed showings and delayed negotiations. Those terms are just as they sound. So they may list the house today, but you won't be able to see it until a day or two later, possibly up to even a week later. What the agents are trying to do with that is either get the home ready, but get it visible to buyers. With the delayed negotiations, what they'll do is once they start the showings, they'll have a set number of days for viewing the property, and then they will have everyone submit their offers for a specific date and time. And with that, you'll see that people will put in their offer. You may have a home that had 50 showings. It ends up with 20 offers. And all those buyers are competing with different terms and conditions. And at that point, the sellers will go ahead and determine the buyer that they want to sell their home to. Those different terms and conditions, I always go over with each of my buyers. That can be the dollar amount that you put down, how much deposit that you have, the earnest money deposit. A lot of clients, I notice, they do get confused with what the bank requires as a down payment, which is that 3 to 5%, and the earnest money deposit. The deposit is going, that is required with your offer. That is typically anywhere from $1,000 to $10,000 with first-time home buyers. It can go up as high as you want it to, as funds allow, and how much you desperately want a home. Some people I've seen put up to $100,000. Typically not on our first-time home buyer market, but the higher the term of that earnest money deposit can help you secure the acceptance of your offer. Within that, there's also other contingencies like inspections. If you have a mortgage or versus a cash offer, those are different terms and conditions of your contract. These are all things that as a real estate agent, I would determine with you, discuss your options, what would work for you best. And then that if you get your offer accepted, then it goes on to the attorney. The attorney approval period is typically 3 days, a minimum of 3 days. And I know that our attorney will go into that, will share with us what that process entails on his end. But like I said, as your agent, I would facilitate and work with the attorney and work with the lender and make sure that we've got all of these things done and taken care of. and benefit for you as the buyer. But in this market, we are seeing multiple offers, escalation clauses, and not most of the time they're waiving inspections. And when someone waives an inspection, there's a lot of risk involved. You walked into, again, you've walked into a home that is worth anywhere from $100,000 to $200,000 on average for first-time home buyers. And this is usually the biggest investment that you're ever going to make. And to be competitive, you waive an inspection, you've spent 30 minutes in that house, what do you know? We've got a little limited information on paper, and that can be very nerve-wracking for buyers. It definitely is something that if we were to waive an inspection, I would highly recommend a home warranty. And I don't do that out of getting anything out of it. There's no benefit to me for you purchasing a home warranty. It's a lot like your homeowner's insurance, which is required, but it covers leaks and broken appliances and your HVAC system. So there's different components of the household that it's going to cover. It's very detailed, but it's that extra added, if you didn't get those first eyes on it from a home inspector, which even after you purchase, you can hire a home inspector. They, are a couple $100. They come out and they look pretty in-depthly at your home, and they inspect many areas, the roof, the flooring, the foundation, the electrical, and they let you know, what is there and what they see. They don't go within your walls, so there's always a level of unknowing. But that home warranty has saved a few of my clients for things that they couldn't have known were going to happen. So going back to escalation clauses. Escalation clauses are a term. So if a home is listed for $100,000 and there's multiple offers, which we can typically find out at time of delayed negotiations if there's multiple offers by communicating with the agent, we can do a highest and best offer and go right to the top of our pre-approval or the most that you're willing to pay on a home, or we can do an escalation clause. The escalation clause pretty much says your home's listed at 100,000. I'm offering 125,000, but I'm going to escalate in certain amount of increments. That could be $2,000, $3,000, or $5,000. It could be any price point, but those are the average numbers that I see and that I use. Beating out a previous buyer. So at $5,000 increments, if somebody comes in at 125, then my 125 offer is bumped to 130. And we can do that up to your pre-approval amount, or we can do that up to the amount that you find is your max for that home. So, with that, there are many different steps involved, which I will walk you through, explain the contract to you to the best of my ability. If there's in-depth questions that you have about the contract, I always refer to our attorney because it is an attorney state. Once we choose your attorney that you want to utilize, they will answer, title questions and tax questions. The other thing is, I have clients ask me a lot is, how much is my payment going to be? Julie and Ron, when they run your pre-approval, they will tell you, with the estimates of your homeowner's insurance and your taxes, and what needs to go into the escrow for those taxes and homeowners insurance. And they can give you the idea of what your closing costs are going to be and how much your payment's going to be per month with that breakdown. So I typically refer back to them when you're looking for specifics on that information, but pretty much it's all an estimate until we finalize at just before closing with the closing disclosure. So there's many steps along the way, but whenever you have any questions, I'm always here, always willing to help. Once we get started and we get your pre-approval, that's when I'll start showing you homes. And I don't typically show homes prior to a pre-approval because of the fact that with our market, homes are on the market anywhere from 5 to 7 days on average. They're selling between 9, you're seeing them go under contract within that 9 to 13 days is the average. And that's only because some homes do go over, but typically what you're seeing, a very active home that's got the delayed negotiations with multiple offers, that's moving to an under contract or a pending status within that 5 to 7 day period. So having gone through that process, then what we'll do is collect your earnest money deposit once you've gotten an accepted offer. Forward everything to the attorneys. We'll get the attorney approval within 3 days. Then we'll go ahead and schedule any inspections. There's pest inspections. There's engineer inspections or home inspections. There are radon inspections, the mold inspections. There's a multitude of different types of inspections that you can have. Typically, we're not seeing them right now. Then once we've got all that information, after it's gone to the attorneys, we've gotten the approval, everything goes to your loan officer, to Julie or Ron. They'll start the process. They'll order the appraisal. The appraisal, there's 2 main dates to our offer, which is the commitment date, which I usually schedule about a month after our contract date. And then the closing date, which can be anywhere from 15 to 30 days after that commitment date. On average, we're doing right now about 60 days. Once we get closer towards the end of the month, we'll probably do closer to 45-day closes. And I always refer back to Julie and Ron for those dates. It depends on their, the lender's workload, and can we feasibly get this done in the 45 to 60 days. It's one of those conditions on your contract that will help you get an accepted offer, the less time that the seller has to wait for you to close. So once we get all of those and we're cleared to close, which is issued by the lender, Julie and Ron, and then it's coordinated with the attorney. My process is we'll schedule a final walkthrough. We'll make sure the house is still the way that it was when you looked at it the first time. And then you'll close on your property and get your keys, and you're on your way to home ownership. And we're well into it and all set. And if anyone needs any contact information or questions, I'm happy to help. That's it.
Thanks, Shawna. A lot of good information on the market, some surprising things we didn't know, so a lot of good stuff. So I appreciate it. Thank you. Next, we have Steve Cammarata, and he's an attorney with us on Family First, and we've been working together for years. And Steve has a lot of good information as well. Steve, are you ready?
Yes, I'm just trying to share the screen.
Okay, no problem. We can see your screen.
Is it all white? It says presenting the real estate.
Yes.
Okay, great.
Yep.
So I guess I don't need the camera, but here I am, everybody. Steve Cammarata. I'm an attorney here with Dentino, Cammarata, and Fazio, practicing in Rochester. I was a first-time home buyer myself in 2019. It becomes less relevant each year, but I've been doing this for 3 years, so now I still do have the credential that I was one of you guys at one point. So, what are we looking at for the legal aspects of your closing? First off, what is a contract? A contract is a legal document. It's comprised of an offer, acceptance, and consideration. Consideration is the transfer of money. So you're going to have contracts, all throughout life, all through different aspects of life. But in this case, when we're talking about real estate, it specifically needs to be in writing and signed. Okay, so offer, acceptance, consideration, and signed. Why are we going to use the GRAR contract? This is the standard form that your agent is going to have. All reputable agents will have it. We're going to use it because it's well developed. It protects both sides of the deal, and it's recognized in the community. So be cautious if you see any different type of contract or somebody saying, "Oh yeah, I'll sell you this," or I'll buy that. Make sure that you're using the forms that are recognizable in the community. At the bottom, you see some of those logos. Monroe County Bar Association and the Greater Rochester Association of Realtors both approve our standard form. What are we looking at whenever you have any type of contract? The 5 W's: who, what, when, where, and why. So you've got a buyer and seller, you've got the address, you've got all of your deadlines. Where is closing going to take place? It's usually at the bank lawyer's office. Why do we go to the bank lawyer's office? Because you follow the money. You go where the money is. So if there's no bank, if it's a cash deal, then you go to the buyer because they're the ones carrying the money. Why? Obviously, because you want to buy a house. The H in this instance is how much. What's your purchase price, your deposit amount, your loan amount, are there seller concessions? So when you think about writing your contract, it has to be comprehensive, and it's pretty obvious what needs to be in it. What's not so obvious, and Shawna can attest to this one, is the basement bar issue. So that if you see this little photo here, there's a nice looking bar, or it could be any type of furniture, and that looks like it belongs in that room. So you visit the house, you see it, you like it, but then when you go through your final walkthrough, it's been removed. If it's affixed to the house, like a kitchen cabinet or a kitchen island, if it's affixed to the property, then it's part of the contract. If it's not affixed, if it's freestanding, then we need to really make sure that you're identifying what it is you're buying. You have to make sure that that's put in the contract as well. Because remember, who, what, when, where, and why, the what of the items. We need to make sure that you're buying the property as well as, if there's a certain item. I've also seen porch swings. So you got this nice porch and you've got a swing attached to it. The person moves into the house and the swing is gone. It's a toss-up, should that have been there, should it not have been there? But the real easy solution is just to write it out in your contract. Attorney approval. Thanks, Shawna. I actually did not have this slide until you were speaking a minute ago. But the attorney approval is important because your contract has been written by your agent, who's not a licensed attorney. I'm sure they're very experienced and they've done this a lot, but ultimately New York requires that the contract is approved by an attorney. Generally speaking, there's 3 days to do this. It could be extended, but most times it is just 3 days. And in that period, I or your attorney will call you. I speak with all of my clients directly, and I'll make sure that you understand the terms of the agreement: purchase price, timelines, make sure you have financing in order. And there could be an approval or disapproval for any reason. So I don't make it a habit or like the fact of somebody signing a contract just later to tell me, "Oh, I've changed my mind." But you could do that. Usually a disapproval comes because you haven't understood the timelines. I've had ones where somebody says, "Oh no, I actually can't move out by that time," or "No, I need to close sooner than that time," or something like that. But in any event, your attorney can guide you through that and disapprove or approve the contract in another 3 days. The key is to make sure that you understand what you're agreeing to, and you're not overwhelmed when your agent is writing up that contract. How many times do I get to see the property? Okay, this is important because, as we've said several times, a lot of people are waiving inspections. So you get to see the property at the first, open house or private viewing. And at that time, you're going to see the property, and if you like it, you're going to put it in offer. After that, you can only see the property during the due diligence period of the contract if you have agreed to a inspection. Most people at this rate are not agreeing to inspections, but that is part of the contract, and that's something that you can negotiate. So if you visit the property during inspection, you get to raise any issues that you might see of the fitness or condition of the property, and you can work it out with the seller as to who's going to cure those or if there's a credit associated or things like that. The next time you see the property is going to be your final walkthrough, and that's usually within 48 hours of your closing. And you're going to want to make sure that during that walkthrough, the property is exactly how you saw it when you made your offer. So there's no new broken windows, the property's in the same condition, no stains on carpets or scratches on floors. And if you do see something like that, then we would have to make a combination for either a fix or a credit for those. Legal terms, caveat emptor in the merger doctrine. So caveat emptor means buyer beware. So you have this period of your contract called the due diligence period. Maybe you've requested to do inspections, maybe not, but there is a title being reviewed in the background by your attorney. And so between the title review, the inspection contingency, and even that final walkthrough to make sure that no items were concealed on you. Maybe a closet was full of clothing when you put in the offer, and now you do the final walkthrough and the clothes are gone and you see that there's mold behind the closet, something like that. You have to do your due diligence. So your final walkthrough is very important, actually, to make sure that you are taking the property in its current condition. So buyer beware means that you've done the due diligence that you're supposed to have done. The merger doctrine means that everything, and this is a New York law, all the contract terms merge with the deed. So for instance, if the contract says, the property's in X condition, but you have seen it and it's in a different condition, but you decide to close anyway, well, then you can't go back and raise the issue of, oh, this item was supposed to be in the property, or the fitness of the property, I don't like it after closing, something like that. All the terms merge with the deed, so what you're buying, there's no take-backs, essentially. The only exception is fraud. So if somebody led you to believe one thing, but then you move into the property and find out a different, then there could be a fraud argument. But that's very hard to prove. So what you're going to want to do is take advantage of those walkthroughs to make sure that what you're buying is what you thought you were going to buy. What do you get at closing? You get a deed. Think of a deed like a receipt. You go to Walmart and you get a receipt. You go to a closing and you get a deed. It shows who sold you the property, what property you're buying, and that what makes you the owner. You're going to get keys as well. Remember to change your locks. You don't know who might have copies of keys. Agents, neighbors, who knows? Change your locks. It's your house now. When is the house yours? During the contract phase, you're actually considered to be the equitable owner. That means that you have rights against anybody else. So that seller can't just go and offer the house up to somebody different. You have the equitable interest that eventually you will close on that house. They can't sell it to somebody else. Once you leave the closing, you have the legal ownership. At that point, you also have the keys. You've paid for the property, and you can go enjoy the property. Later on, maybe the next day or the next couple days, your deed will be recorded, and you will be the record owner. This is the most secure way of ownership, and it shows that you own the property against all others. How are you paying for this property? You're going to need a mortgage, and the Homebuyer grant is a great way to finance this or to help you out. And that's going to be issued from the bank, but ultimately you will also have to bring a certified or cashier's check from your local bank. We will not take cash at a closing. We will not take a personal check. So you make sure that gets certified or cashier's. remember you put down a deposit, and as Shawna will tell you, a lot of people are putting down big deposits. It's a way to show that you are serious against all other buyers. So if you were to put down $5, $10, $15,000, you would get that money back at closing, or rather applied to your closing costs. Paying back the loan, you're going to be signing two items. One is a loan note. Think of that as your IOU. The loan note is payable over 15 or 30 years, and it shows how much you're paying back. What interest rate, how much per month. Your mortgage is actually your security or your collateral. So two items, loan note and mortgage. Your lawyer will explain those to you at the closing table. How does buying a house compare to other purchases? So if you buy a car, you sign a security instrument. That's called a secured transaction. Your car can be repossessed. So it's a very secure way of buying a property. If you're using a credit card, that's called an unsecured transaction. You could actually leave the store with the item that you have, but that credit card company can't take back that item. They can only go after you to pay the debt. So car loan, secured. Credit card, unsecured. Guess what? A house is secured, the security of a mortgage. So think of that like your car, except for to do a foreclosure is a lot lengthier of a process. They can't just repossess the house; they have to go through a long procedure. But if you think about how the loan works, in security, you're pledging that house up for security. So just another legal aspect of this process. Closing costs. Julie spoke about this early on. Your banker really will have the best estimate for you up front, but you do have to pay loan origination fees, homeowners insurance, current month of interest, attorney's fees, title insurance, and deed recording. So keep that in mind. What does your lawyer do for you? We will review your contract, review the back chain of title, make sure what you're buying is what you're expecting to buy. There's no liens, mortgages, bad ownership transfers or anything. We'll keep timelines of your closing to make sure you close on time. We'll go to the closing with you to make sure that you understand what you're signing. We'll give you all of your closing statement. We'll make sure that all balances so that you're paying what you expect to pay. And we'll issue what's called a title insurance policy. That's something your bank requires, as well as you're going to want it to make sure that you are insured. Different from property insurance. This is a one-time fee to make sure that the back title that you're purchasing is what you expect it to be, and there's no other claimants to your property. Recap of some of the key terms: the contract date, the contingencies, commitment date, commitment letter, clear to close, and closing date. I'm pretty sure we've talked about all of these at some point today. And the legal documents. What I'm doing as a lawyer is I'm working on the contract, the deed, the loan note, and the mortgage. So those are the items I talked about. And that's all I've got for you. Give it back to Julie.
Thanks, Steve. I like how you put everything in nice basic terms for everybody, because it sometimes they have those definitions of things that seem basic to us as we're working, but maybe not so much to first-time home buyers. So really appreciate your being here and your good information. So now actually I just wanted kind of to turn it over to questions, and I'm going to go in the chat box first and just take a look here and go through, see if we can answer this or one of our experts can answer. The first question is, will the recording and slideshow be shared after this session? The answer is yes, it's being recorded, and we can share it with anybody who would like a copy. Ron, you want to take the next one?
Are grants available if you're paying cash, or do you need to have a mortgage? You do need to have a mortgage.
How long does the course take to complete, and how much does it cost? So Andrea had mentioned the course takes about 3 to 4 hours for that Homebuyer online course that's offered by CCCS. And how much does it cost? It's $40, and there is a coupon code with it that allows you to get the for $40, and then you get the certificate at the end of the course, which we need to for the grant submissions.
Looks like Shawn answered the
Oh yeah,
insurance
there was an
question.
insurance question. Looks like Shawn handled that one. And there was a question about how much down payment do you need for a house. So the first time homebuyer programs offer a 3% down payment. And that is the minimum unless you're going a direction of a government loan, such as VA if you're a veteran, or the USDA, which is in the rural areas. And just to give people an idea of where the rural areas are, it would be like Ontario County. It would be parts of Livingston County. It would be on, where else would you say? Genesee County is all considered that, Wyoming County.
They're done
Wayne.
by, yeah, they're done
Wayne.
by,
Yep, Wayne.
Wayne County, yeah, they're done by, not just zip code, but by census tracts. So if anyone's interested in a
Mhm.
house in one of those areas, give us a call or send us an email with the address. We have a locator. We can go in and let you know if it's in a census tract that qualifies for USDA.
That's right. We plug in an address and it tells us. Question on the whole presentation. Okay. A question for the whole panel. In your own personal opinions, does the housing market in Rochester feel the same as it did in 2021 and 2022? Shawna, are you still on?
I am.
Okay.
Yeah,
Financing?
I would say that the housing market is pretty much the same, but I think that we have even less inventory than we had last year. The rates were a little bit lower in the first half of the year, and they slowly crept up and they've kind of maintained from the fall to now, but it seems like there are less houses on the market. And I don't have the exact number per month that there were housing available last year, but just as a feel as an agent when I'm out there, we're waiting. Me and my current client base seems like we've been waiting a little bit while longer than we were last year. So it's definitely going to be a challenge.
Now, there's another question here. When is the best time to buy a house? So, I mean, Shauna, would you say any time like in a certain season? Would you say at a certain time of the year would be better?
So this is typically around February, March is the onset. April we'll see a lot more inventory right up until June. So a lot more people are just now getting back, especially with the first time homebuyer grants. That's a much larger buyer base, is first time homebuyers. So what we will see is the fall is a great time because typically families want to get if they have children, into their homes during the summer and then start a new school year in their new school. So that's kind of a goal for families. And then about October, it starts to slow down, but so doesn't the inventory. So it's kind of good to stay on it all year. Don't wait. You don't want to miss out. And there's a learning process. I think that I can tell a buyer, look, you need to be aggressive. You need to do this. You need to go in, everything you got. But they're like, well, wait a minute. That's not this isn't a bidding war, but it kind of feels like that. So that experience, when they can see it and live it and know that it was competitive, because some people I can live anywhere in Monroe County. I can live anywhere in Monroe County, Wayne County, or Ontario County, Northern Ontario County. Some people are like, I need these streets. And you have like this small section where they want to live. It gets a little bit more competitive if you're looking for a specific township. So yeah, kind of know exactly what you want. I wouldn't wait.
Okay. All right. That sounds good. Go
We
ahead.
had a question on the income limits for both the grant, the Homebuyer Dream Grant, and the Sunny May programs. And interestingly enough, the Achieving the Dream Sunny May program and the Homebuyer Dream Grant program do share the same income limits, which is 80% of the median income, which in Monroe and surrounding counties for 1 and 2 person households, 79.6. And then if you have a 3+ person household, it's 91,540. And then the low interest rate program for Sunny May income limit for a 1 and 2 person is 99,500, and then 3+ is 114,425.
So anybody who's been interested in the Homebuyer Dream Program, Sunny May, last year, these income limits have gone up, what would you say, about
About
$10,000?
$10,000.
10,000, so it's significant. So if for some reason you fell a bit over last year, now's the time to get into it this year because it's another 10,000 that they're allowing. I'm actually gonna open this up to any questions from anybody. You can unmute your mic at this time and ask any questions. If it's directed towards any particular person, then just let us know.
Looks like it might be
Okay.
good.
Okay, so if anything you think of later, or you can always reach out to Ron or myself or any one of the speakers. I had some questions. If you could obtain a copy of the recording, which we can do that. So just let us know. That's not a problem at all. And we're here for you. Ron and I have been working busy with pre-approvals, and we're waiting for more homes to come on the market, just like everybody else. So if anything comes up, we're here to help you. And I guess that's it for today.
I see that,
Go ahead.
I see that Cindy just asked
Oh.
if there's a grant or government loan, does it cause issues with closing?
Do you mean maybe as far as timing goes? Generally not. The Homebuyer Dream Program, we start that from application date, so that's usually in place. Julie, what do you think about like the other grants?
Oh, okay, so the grants that we talked about on this seminar today, I haven't ran into any timing issues. The thing is that we do need to know if you're looking to get those grants. We kind of want to start that right from the very beginning when you're at the pre-approval process, so that just like us and needing time to process the mortgage, the grant folks also need time to process the grant. So we can't delay with things, but we haven't really found that we have problems with those at closing or prior to closing. I can say there could be, definitely some one-offs where that's happened, but we really try to be very efficient with what we're doing, and with our knowledge, we try to get everything done in advance so that we don't run into that issue, because we really don't want to be in that issue. We don't want to put you there, us there, or the attorney there. So we really try to avoid that as best we can. So we're going to wrap it up for today. And like I said, we're always available for any other questions. And like I said, we're here if you need us, or any one of these speakers today. And thank you to everybody who has participated today. It's been wonderful. I think it's been a lot of great information. We've had people thanking us already and saying that it was a great session. So I appreciate that.
Great, thank you as always, Julie and Ron.
Thanks, Shawna. Thanks all. We'll talk soon.
Thank
Have a
you.
good day. Thank you.